Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 195 for Monday, 15th of September 2025. Hope you're all well. Hope you've had a good weekend. Hope you're ready for an interesting week ahead. Before we kick off, just a quick check to make sure that the technology is working in our favor. If you're here in the room, if you can confirm that you can hear my voice and see the slides, that would be very much appreciated. Just to be able to make sure the technology is working in our favor. That's great. Fabulous. Much appreciated. Thank you. So for those of you joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 20 to 30 minutes, looking at strength and weakness within FX indices and commodities markets, looking at a few charts of interest, and then a look at the live markets. It is not a signal service. It's not trade recommendations. It is just me sharing what I'm looking at, which might be of help to you in your own analysis and processes. As always, you are very welcome here, but just remember that you are always responsible for your own trading decisions. If you want a bit more help and support, the Traders Accountability Group is running, basically helping traders build discipline, accountability and consistency in their trading. If you want more details, you can just ping me there, or there's a QR code, or there's the bit.ly code of VTP tag that will take you there. The whole idea being to basically just help have a group that helps you build your discipline, accountability and consistency in your trading. And if you want some more free education, I will be delivering the Monday Market Matters webinar this afternoon for active trades, 2 o'clock London time. Today's educational piece will be on how to trade pin bar formations. You can either go to the Active Trades website and register there, or once again, use the QR code, and that will help take you into it. Okay, let's dig into it. All right, so as I said, I'm always looking to fly through and share with you as much as I can during these sessions. So I do fly through them a bit, but they're always recorded. So if you want to watch back to them, you'll find it's either live streamed on YouTube, or if you sign up to the blog, you'll get a copy of it later on today to watch back. If you're new to trading or new to joining us, this might appear maybe a little bit confusing or overwhelming, but it's not really. It's snapshots from my own model, that the work I do at the weekends to basically identify where's the strength and where's the weakness, starting with FX markets, but then also looking at indices and commodities. So what is this telling us? How can we use it? So here we are. We are into week 38 of the year for the 15th of September. Where's the strength? Where's the weakness? Well, what we have seen is Swiss franc push its way back to the top of the pile with regards to FX pairs, which we'll look at in a moment. And interestingly, we have seen Aussie dollar also sort of push its way up from sort of being low down the bottom half of it. Okay, only a couple of months ago, it's managed to work its way back up there. Various reasons for that, but that has come at the expense of both euro, which has kind of fallen out of the top part, and also sterling. Despite this morning's little bump, overall, okay, sterling continues to weaken, and we'll see what kind of happens with that. We've got, of course, certainly for those of us here in the UK focusing on that, we have got basically we've got jobs numbers tomorrow morning, and then we also have we've got the MPC on Thursday, and then we've got retail sales on Friday morning for the UK. But invariably, probably the big news of the week in terms of major economic news, of course, is going to be the FOMC meeting on Wednesday evening. It's where people are expecting a 0.25% cut. That's pretty much baked into prices already. And what people will be interested in is to see the sort of rhetoric that goes with it. And as we can see with that, which we'll look at in a moment, US dollar remains bottom of the pile, okay? And Japanese yen has kind of drifted its way back there. We also have we've got the Bank of Japan, their meeting on Friday. People are interested to see if they will raise or have a rate hike, and kind of everybody's a little bit kind of trying to understand and work out what the score is with that. But ultimately, when I'm looking at where's the strength and where's the weakness, primarily you've got Swiss franc to the top of the pile with Aussie, and then you've got dollar and Japanese yen at the kind of at the bottom of the pile. When I look at how we've started for the week in terms of kind of the last about 18 hours since the markets opened last night, sterling has had a good morning. Whether that is a pump before a dump in the jobs numbers in the morning, we shall wait and see. But pretty much dollar's been sort of kind of given a bit of a slap around, this morning in terms of coming into the start of the week. Once again, we're in FOMC week, so there'll be some shenanigans, there'll be some volatility spikes, there'll be some dual consolidations in the front of that, but we'll look at that more in a moment when we switch across to the live charts. Certainly, what is of interest to me is that in terms of my model, there is sterling still is in in sort of kind of buying environment, but equally a lot of the Aussie pairs are also in buying environment, which is probably giving another, as I said, another underlying indication of why Aussie has kind of worked its way up there into the top of the pile. When I cross to look at indices and commodities, well, what it's telling me is that, as you can see, Dow, S&P and Russell, they are all in STAM 1 Bravo, which is like strategic buying environments. DAX remains a tactical short. Nikkei is strategic buying. That's been price action there has been fabulous. Oil remains on the strategic sell. Regardless of kind of some of the events of the last few days in terms of strike by Ukraine on Russia. All right, it still remains overall oil remains on a kind of strategic sell environment. Gold and silver, they are strategic buys, and we'll look at that in a moment. The VIX remains bullish, VIX has even is dropping lower than that. So there is a lot of bullishness around there in front of FOMC. And as I said, it's pretty much baked into the price. It'll be more about the rhetoric and any comments that have an impact on the kind of trajectory of Mr. Powell and the Federal Reserve. Okay, so there we go in terms of just the overall picture, in terms of looking at where the strength and the weakness is. Let's go and have a look at just a couple of charts of interest before we switch across to the live markets. Okay, so what we do here is I just put up normally about 3 or 4 just charts of interest. I don't consider myself an equity specialist, but listen, we're all traders. Everybody loves looking at a chart. Everybody loves looking at the underlying story and the underlying price action. And as always, there's either something that we can learn from it or something that we might want to add to our watch list. This is a weekly chart of British Aerospace Systems, BA on UK markets. Why am I interested in this here? Well, if you take a look at a lot of European defence stocks, over the last couple of years, it's had a great run. But what we had started to see, sort of early this year, was basically the sort of European defence stocks starting to sort of, roll over a little bit. And if you look at quite a few of those bigger, European defence stocks, so this British Aerospace, but even if you look at like Airbus, you look at Dassault, Leonardo, Saab, Rheinmetall, quite a few of them had started to roll over. We'd got beneath the 20-period moving average, and we were starting to drift a little bit lower there. And then, of course, last week, what we saw was invariably a few of Mr. Putin's drones turned up in Poland, whether by accident or design. I'll let other people comment on that. But what we did see is that invariably the defence stocks basically had a really nice bump there. And as you can see in this case, British Aerospace bumped its way all the way back up to recent highs. It's just tickling the soft underbelly of like £2,000, £200, etc. And as I said, if you look at quite a lot of those European defence stocks, they have basically done the same. It's almost as if their prices are about to roll over. Some event happens to basically give it a little bit of a shot in the arm, all right, and that is what has happened there again. And so, as I said, this is British Aerospace, but you might want to look at a few of those European defence stocks to see how they have played out. I think Airbus has actually even pushed to new highs. So it's kind of interesting to me on many levels. Sort of ex-military trader investor. I like to keep an eye on the defence sector as it is. All right, it's been a good few years overall. Not surprising because of the events in sort of Eastern Europe, etc., and elsewhere. But it was quite some ride of defence stocks last week, and it kind of it raises interests about, especially for the UK and France, which we're about to look at in a moment, whether my my cynical middle-aged man tinfoil hat theory is that Starmer Macron might be sort of intrigued in doing a General Galtieri, who was the the head of Argentina in '82, who decided to basically invade the Falkland Islands as a way to distract from domestic strife. And I can't help but thinking that maybe history might maybe repeat itself. But as I said, that might just be my cynical middle-aged man tinfoil sort of hat-wearing thought. But anyway, ultimately, we're just traders, and that's a good trend, and you want to get a piece of that good trend. So watch how those European defence stocks continue to play out over the next couple of weeks and months. Okay, so I mentioned there about France. This is CAC 40 on the weekly chart. Okay, weekly chart here. Now, last week we had the last week we had the collapse of once again another French Parliament. I think that's is it 5 prime ministers they've had in 2 years. Please, I'm sure someone will correct me if I'm wrong, but either way, it does not in any way does not in any way kind of give you any particular confidence about sort of France and Europe in general. I would suggest, and I'd say that's reflected in the share price, or rather in the price of the CAC 40, the equity index. My view here is that we continue, all right, okay, despite all the shenanigans which we'll come to in a moment, really we have been for the last few months in a range between 7,600 and 8,000, okay, and you have to ask yourself, will appointing another just another new prime minister, is that the likely thing that will give the sort of stability that people would want to invest in France? You pay your money, make your own choices. My view would be no. And even if it did, ladies and gentlemen, as you can see over the last couple of years, even when price has broken through 8,000, it's really struggled to get above 8,200. Remember, this is at a time when American markets have been hitting highs. Even the DAX, okay, despite all the economic woes we've seen, fundamentally in Germany, continues to plow higher. Even the FTSE, with a kind of shocking handbrake kind of government policies, that has pushed its way high. But as I said, CAC just seems to be sort of malingering between 7,600 and 8,000. As I said, every time it gets up to sort of 8,200 level, you can see that basically it doesn't like it and it rolls over there. So, as I said, there might be a little bit of a relief rally up to 8, all right, but then I'll be looking to see how does that play out. And even if there's an element of giddiness and it pushes beyond 8 to 8,200, I'll be looking for the price action to see if it runs out of steam there, or if markets don't like it, well, 7,600, if that can't hold, well then I'd be looking at, you are looking down around about 7,250, 7,250 there, okay, around the 200 and stuff. So I apologize for my artistry on the charts. As I say every week, I'm a better trader than I am an artist, okay, but hopefully you get the gist of what we're looking at there. So yeah, interesting times for France, the CAC, and Europe in general. And let's finish on a good one. All right. So Autozone, AZO, Autozone on the weekly chart here. Now, if, like me, you have a lot of middle-aged male friends who are absolute petrol heads, you will get to quite clearly see how much time, energy, and money they will willingly spend on their cars, whether it be the family car or their own little sports car, of which my friends have quite a few. I don't in any way consider myself a petrol head. They're a bit two-dimensional and slow for me, but that's a different story for a different day. But what I do like is trends, and I'm good at identifying trends. And Autozone has been a fantastic trend for the last few years. So, for those of us in the UK, Autozone it's like a bigger, better version of Halfords, right? And invariably, what we have seen over the last few years is as the kind of as the sort of the policies in the US and elsewhere in the West, as we saw interest rates rise, what we saw was that lots of people coming to the end of their HP on their cars, rather than actually just being able to get a new car on HP, many people have instead bought basically second-hand cars and are maintaining them or doing them up as themselves because of the either the kind of the cost of new HP because the interest rates are much higher, or just generally the kind of maybe the sort of the lack of monthly disposable income as people's livelihoods have been squeezed. So that is one reason. I'm sure there are many other reasons, but that is why we've seen AutoZone. They have contributed to this fantastic trend in AutoZone, and every time I think that it can't go any further, it does. Which is just great. It's a great lesson to learn for all trend followers that stick with the plan. If you're going to be a trend follower, you have to take you have to sort of ride the trend and take it. And here the red 50 period moving average, which I'll talk about in equities, has been a great fair value line, has provided really good sort of dynamic support as we've worked our way up. From I started getting interested in it, I think it was around about sort of 1700, 1700, but you can see it has just continued to work its way higher, a bit of an ascending triangle there. And once again, excuse my terrible artistry, but you get the idea. As I said, we had a double top earlier in the year, and I was like, is this the end of that trend? But no, we pushed higher. The thing that would concern me is that we're starting to go parabolic here. Once price starts going vertical, I do start to get a little bit nervous. We can see we had an example of this sort of through 2024. My own what I tell to people when prices going parabolic is, if you're on the sidelines, do not be chasing price. Okay, that never works well. If you are already in this trade, well, then this is where you kind of I'm starting to tighten up stops. All right, okay, I'm just starting to realize that nothing can go vertical or nothing can go vertical for a long time. But actually, what we'll see is maybe there'll be a pullback, and then maybe that'll provide an opportunity. Maybe the big round number of 4,000. That would be I'd be looking to add on that at this particular moment. So that is AutoZone, okay, and as I said, it's a great trending chart. Okay, want to add to your watch list to see how that plays out. Okay, so there we go. There's a few charts of interest. Let's switch across to the live markets now and see what's going on. So if you'll just bear with me for a moment, we'll switch across. So just bear with me for one moment. And, here we go. Okay, so I'm hoping that you can still hear me. I'm hoping that you can see my charts now. Okay, so this is just an indices profile. Okay, it's an indices profile I have. So I've got Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, um, uh, West Texas Oil on the weekly, DAX on the weekly, Nikkei on the weekly, FTSE on the weekly. The whole idea to give me, an idea, just a snapshot, really, snapshot of the big major global indexes, all right, and to look at how they're playing out. What I can see is that, you don't really even need to go in massive detail, but if we look at, S&P 500 and Nasdaq, okay, Nasdaq and S&P 500, S&P, we kind of close. We're up here at 6,600. Once again, we have closed at weekly highs. Okay, I do an awful lot of work on the weekly charts. I love weekly charts. Okay, even the Dow. Okay, even though maybe the price action wasn't as bullish and strong, it's still as a weekly close. Okay, probably the highest weekly close there in the Dow. So, and this is of course the week before the week close before we go into the FOMC. Okay, and as I said, people will be interested to see what the rhetoric is and whether Mr. Powell gives an indication of the kind of the likely direction of future interest rate cuts. Okay, what and when they are likely to be. Okay, so that is what we are seeing there. Even the Russell, right? The Russell let's have a quick look. We don't really cover the Russell as much because most people are interested in the others, but Russell, that has still been a strong trend, hasn't it? And whilst it hasn't gone to new highs like the others have, it is still working its way higher. Okay, sort of just slowly but surely. Wynn says, reckon we'll get a cut this week at FZ. Yeah, definitely. It'll be 0.25%. Okay, I think 0.25% is reckoned. 0.25% is basically is priced in. I think maybe there had been a little bit of talk kind of last week after the PPI numbers that basically they'd go for maybe 0.5%, but I think the CPI numbers kind of sort of removed that. So yeah, there will, I think the world and his wife is expecting a 0.25%, 25 basis point cut on Wednesday. It'll be, as I say, about the rhetoric in terms of future entrants. So yeah, it is. Yeah, you're right. As I say, it's believe it's already priced in. Okay, it'll be about the rhetoric and about the kind of any indication of the kind of likely trajectory. So those American indexes, they are bullish and they continue to be bullish. Okay, regardless of anything else is going on, that's it. Regardless of what you might see in the data in the markets or people's commentary, the price is the price, and they continue to work their way higher on that. So, Xingyan, apologies if I've pronounced that incorrectly. Yeah, I think Powell's comments on future tariff-related inflation of jobs and which one they may prioritise working on in the future will be what drives him. Yeah, I agree. All right, I agree. I think most people think that Powell's now focusing on jobs over inflation, but we will see. All right, we will see. Maybe they'll be, maybe they'll put the cat amongst the pigeons. Who knows? But Mr. Powell doesn't strike me as that kind of character and stuff. So as I said, everyone's going to be watching to see what the commentary is on Wednesday. But how does that look elsewhere? Well, if you look a little bit close to home, if you look at the DAX, we just looked at the CAC before, which is just literally sort of just bouncing sideways. The DAX, even though the German economy was printing some terrible numbers, still managed to rally its way higher. A lot of that, like Rheinmetall and I think SAP. But we put in the summer market. This is what you expect over the summer market. It's just basically bouncing back and forth at highs. What I was interested in is that we closed beneath the 20 a couple of weeks, and we didn't manage to get back up above it. Didn't manage to get back up above it. All right, and so it's malingering, and maybe it's just malingering there until the FOMC give the Americans some clarity, and then everybody will just follow that. Okay, in that particular sense. If I go down to the daily, it's just. I see that as basically 23,750. It's just sort of pivoting around there at the moment. It's neither exciting. Maybe it's coiling up a little bit, waiting for that. But I'm not terribly excited in that moment, looking at that particular price action. If we look closer to home, the FTSE 100, what we're seeing here, okay, is as I said, even with the shenanigans that are going on in the UK, okay, in terms of tax and government, etc., the FTSE has managed to continue to work higher, and it just goes to show how that the CAC we looked at before is just there's a real malaise there. But you do have to wonder, FTSE basically, is that a bit of a double top showing? Is that just basically taking a little bit of a pause? I said this last week that, they've now come out with Rachel Reeves come out with a date for the budget, which is a very late one, 26th of November. Whether she's hoping that the Bank of England meeting on the 6th of November is whether Mr. Bailey's going to do what he's told and pull some rabbits out of hats in an effort to basically help look after her. We shall wait and see. But I look at that as it's a bit of a double top. Is it a bit of a pause? Is it a case? Can UK markets go sideways until the end of November? Over 2 months. Well, of course they can. Markets can do whatever they want, but the question is, will it? When I look at the daily chart here, the daily chart on the FTSE, the daily chart was in a nice trend, doing what we want to see it doing, higher highs, higher lows. We had a pullback here, okay, sort of end of August, nice channel, which ended with these pin bars. That's what I'm going to be talking about at 2ish for active trade. But the thing I'm interested here is that, yes, it has pushed higher the FTSE, but look how it's almost like it's sat on the daily 20 period moving average. Okay, almost like it's sat on that daily 20 period moving average, and I'll be looking to see, we still haven't pushed to new highs. Does it have the energy to do that? All right. Does it basically sweep up and basically false breakout, or does it even basically not have the energy to that? In which case, if it breaks that 20, then I think we go down to I think we work our way down to the 50. That's what I look at. So I think the next few days are going to be interesting. As I said, we've got UK jobs tomorrow morning. We've got bank rate on Thursday. Most people aren't expecting a cut there, okay. But once again, maybe there's a cat amongst the pigeons if the Americans do something major or different the night before. And then we've got UK retail sales on Friday morning. Okay, so there is the opportunity there, a bit of data, not just in the UK but in the US that might maybe change that. But I would just be watching that for the remainder of this week, okay, to see how that plays out. All right, before we look at dollar, let's have a little look at just a couple of the commodities people love. Gold weekly chart, as we said, we've been talking about it all summer, coiling up, broke out, continues to go high. Okay, look at the daily chart. It was a great run, that wasn't it? But it's looking, it's going a bit sideways, that isn't it? Now that's not a shock. I think the world and his wife will go sideways until FOMC on Wednesday. That's my personal opinion. And then it's all about certainty. If there is certainty, I suspect what we will see is we'll see gold drift lower. If there is uncertainty, okay, then I think we see gold rally higher. Okay, gold is it's the kind of, not only is it sort of risk on, risk off play, but it's also certainty play, and that's what we look at there. Not so no real uncertainty when it comes to silver. Silver, is on its tear. It's above 40. It's once again strong bullish close there. Okay, it just kind of ground its way up there, but we are working our way. We're working our way higher there. That has been quite some move from. We talked about it. How it kind of you had the 50 period moving average acting as that sort of dynamic support. You had a trend line, it's kind of squeezing, and then it sort of broke and pushed its way higher, and it's continued to do that. Okay, and it's making higher highs, higher lows. That's that's an uptrend. Talking about grinding its way higher, Bitcoin. This is the weekly chart. We talked about it a couple of weeks ago, how we put in this kind of really nice sort of double top around about 120, broken our way down lower. But the weekly 20, there was quite a few instruments that basically came and bounced off their weekly 20 period moving average, which was also where we had previous resistance, and that has done that as well. Okay, and we can see that actually the last couple of days we've had a little bit, we've got above the daily 50. Okay, can it hold above that once again? Strange enough, the FOMC will have an impact on Bitcoin as well, I think. So plenty going on there. Let's switch across to the US dollar chart. We'll have a look at dollar. We'll have a look at. We always finish on sterling. Okay. As always, I've got far too many packages running here and stuff that during the middle of the trading date. So it doesn't help that I'm trying to live stream it as well. But there you go. That's tech issues, tech faff. But we'll bring up the dollar, have a look at what the dollar's doing, have a look at where sterling's taking us as well. Primarily I look to, my main focus is FX. That's my background. That's where I like to work and operate. Okay. So, what I talk to about new traders is that, regardless of what you want to trade, I would start by looking at the dollar and a particular dollar index. Okay. That's, the dollar's the big daddy of that market. So if I can understand what it's doing, whether it be bullish, bearish, whether it be quiet, volatile, whether it be on a tear or whether it's just asleep, that is a great starting point. And so hence why I have profiles like this up here. So this is a dollar profile. So I've got Aussie dollar on the daily, Kiwi dollar on the daily, Euro dollar on the daily, dollar Canadian on the daily, pound dollar, dollar yen, dollar Swiss, and then dollar index. Okay, so what's dollar index telling us? How can it help us? Well, if we go up to the weekly chart, okay, those of you who have joined us, we know we've been in a great downtrend. We've kind of, this is the last 6 weeks we've talked about this, is that we've just been in kind of a bit of a block there. We are still, you'd still have bearish bias. Prices, there's all the wicks are to the high side. We're bouncing off the 20 period moving average. Okay. But what I also noticed is we talked about this on the daily chart, kind of that range between 97.50 and 98.50. That's where we've spent most of these last 6 weeks there. That's like a proper summer market. We kind of tried to break out of it last week, but we came right back in. Now, admittedly, we're sat on it here. You have to look at this and say, is FOMC going to give us the clarity on that? Okay, is it going to be the kind of, is this a case of, the basically it's holding up before it basically collapses lower, or is it holding up because it's building a base? Am I going to, rally our way back up to 100? If I'm honest, a lot of that will depend upon, I think, Wednesday evening's comments. As I said, my view would still be, as on the weekly, on the daily, is that, my bias would be bearish on the dollar. Okay, would be bearish on the dollar. But it's the dollar. What the dollar does, what the dollar wants. It's the big silverback gorilla of the FX market. Okay, so whilst my bias is bearish, and I would expect us to maybe push more back to those lows, and I think my view would be that kind of Trump would want a lower dollar. Trump investment want a lower dollar, but those of you who've traded for a while will know, what you want and what you get can be two very different things. So you have to be prepared for everything. But I just look at the way that is just, it's just sat there. Okay, sat there waiting for the catalyst to move it. And as I said, that kind of bearish dollar is still viewed. If I look at, here we go, Aussie dollar. Remember when we looked at the STAM, Aussie has pushed its way into second place, okay, in terms of the overall strength v weakness. That's been reflected there in the price action. Even Kiwi dollar has strengthened against the US dollar, okay. And Kiwi dollar has been, immensely weak. We've had dollar weakening against the Swiss franc, okay. We've had euro is generally okay, being stronger against the dollar, but not in the same strength that we saw earlier in this particular year. Cable will look at in a moment. Pound against Japanese yen. Pound and Japanese yen, as we looked at earlier, they are they're at the bottom of my STAM. Okay, in terms of they're the weakest, and that's what we're seeing there. I talk about this, when price and the moving averages are all wrapped up, it's like the calm before the storm. It's like price. It's like I say, it's like magnets. You're trying to push two north ends of magnets together. Okay, when like price moving averages wrap up like that, what happens is they basically normally explode out of that. And as I said, we're waiting for the catalyst, and perhaps FOMC might well be. And as I said, we've got FOMC on Wednesday, and then Bank of Japan on Friday. So it would not surprise me for certainly for the next 48 hours. So we just go a little bit sideways there, don't we? As we just basically wait for the catalyst. So there you go. There's dollar. Let's just finish on home turf in terms of sterling. Okay, I appreciate I've run over a little bit, but it's a busy week. There's lots going on. Hopefully it helps you. So this is sterling profile. All right. So cable, euro against dollar, euro sterling on the daily, pound Aussie on the daily, pound CAD, pound yen, pound Swiss franc, pound Kiwi, FTSE. Okay. Kind of that interesting mix. As I said, Aussie has strengthened against the US dollar, but also against sterling in the same way New Zealand dollar has strengthened against sterling. Canadian dollar has weakened. All right. There's been normally those condols move in alignment, but they haven't there. Okay. Canadian dollar has kind of has weakened its way a bit there. The Canadian economy is not exactly looking great, but anyway, let's look at cable weekly chart. You've heard me talk about how the strength in sterling, a lot of that has been down to dollar weakness more so than any perceived strength in UK economy. They've just run off, they've run off the back of that. But the price action there on the weekly charts, kind of 134, 135, they're holding the weekly 20, and we've pushed away a bit higher there. Okay. As I said, sterling has strengthened this morning for reasons known only to anybody else but me, but price is the price. As I said, if it's a pump before bad numbers tomorrow, we'll see, but you have to trade what you see. And the last couple of days we have been working our way higher. Pound against the US dollar, pound against Japanese yen. Pound against Japanese yen, this is the weekly chart, working away up, big round number of 200. We've kind of just been sat underneath there. As you can see, we're kind of starting to work our way up through that today, okay, in the daily chart, working our way up there. It's a bit of, So you've basically got a bit of sterling strength and dollar and yen weakness, and dollar and yen are at the bottom of the STAM. So it's not a massive shock. Wherever possible, I want to be buying strength and selling weakness. What interests me is, remember, Swiss franc has kind of been at the top of the STAM, and that has been reflected in this kind of direction of travel here. Sterling weakening, Swiss franc strengthening. But I wonder if maybe that Swiss franc sort of strength is starting to sort of drift a little bit. Okay, you can bet your life the S&P don't want the Swiss franc strengthening too much. And then finally, euro against sterling. We talked a lot about this. We had a great trend there. Okay, great euro strength, sterling weakness. We kind of double topped it there with the double tops both having like engulfing candles, and then we kind of just drifted here. I mean, it's kind of like it's a nothing channel, all right, just pivoting around the 50-period moving average, isn't it? We're getting a little bit lower. Yeah, let's see if any of that kind of sterling news is there any real strength there, or will it flatter to deceive? We shall wait and see. We shall wait and see with that. Okay, there you go, ladies and gentlemen. Let's draw it to a close there. So, as I said, I'm always just flying through as much as I can share with you. Okay, I appreciate we overrun a little bit. So, as I said, I'm just trying to share as much as I can with you. Okay, I hope you found that useful. I hope that's given you just a little bit of insight or help that you can take away for your own analysis. It's going to be a big week. I hope you have a fabulous trading week, everybody, ladies and gentlemen. Have a great week, and hopefully we'll see you next Monday for the next Monday market update. Trade well, everybody, and we'll speak soon. Cheers.